Welcome back. Hope everyone is doing fine in the market. Without further ado, let's start our action plan. I hope you have picked up all the trading skill from our mentorship program, as we won't be covering them here on how to trade. What I'm going to cover in the action plan, it's plan, plan, and plan. I'm the general, I'll tell you the plan, you execute it. That is why you need to learn all the trading skill from the mentorship program. Let us travel to Egypt today and visit the greatest wonder of the world, the pyramid, most stable structure. And we are going to build our pyramid portfolio today. We'll split the pyramid into three portions: long, medium, and short term. Also, I'll name it into the foundation, the growth, and the speculation portion. Let us look at the foundation, long term first. Without these portions, the whole portfolio will crumble easily. 10 years later, you'll be lost if this portion doesn't exist. Remember the goal that you set from the last episode that we talked about? Focus on them. Here are some of the characteristics of this portion. It should consist of most of your capital. Okay, 50%. We'll be applying the 50-30-20 rules. It should consist most of your capital. Invest for long terms, for capital gain or dividend. Okay, it's up to you. This asset should stay strong in a bearish market. Listen carefully. Asset. So it is not only applicable to stocks, it applies to all other financial instruments that you are good at. But these rules applies to all types of instruments, okay? But since ChartAccess is focusing on stocks, we'll do stocks. The next characteristic, solid base price. When the market sentiment is bad or economy is bad, the price of this asset has a base to fall onto, and it has a lower risk of turning to zero or fall way below. Some of the examples are as shown. Okay, it could be changing through the time. Okay, trust fund, blue chip stocks, money market funds, bond fund, dividend stocks. Those are with lower risk in the market. Next, growth portion, medium term. This portion should consist of assets, okay, or stocks that plays a role in the upcoming 5 to 10 years. Some of the other characteristics are as following. Usually, these assets or these stocks have a medium to high volatility, huge growth potential, and most of the time they are the market leader in their own sector. High revenue but low dividend. That is because they will be using the money from the revenue and reinvest into their own company growth. And that is why they give low dividend. But that's subject to the company, okay? It could change, it could be very depending on the company. So put 30% into these types of stocks. The next one would be the speculative or the short-term portion of our pyramid. A safe trader will not risk too much on a speculative or short-term trade, as high volatility is equals to high risk, which also leads to high reward. You must have heard people becoming millionaire by speculating certain stocks. A story has two sides. Always remember that. There are people becoming millionaire. There are also people sleeping at the street the next day. So it is not advisable to raise all of your capital in this. That is why we put 20%. And some of the common characteristics in this portion will be pump and dump scenario that you can see. Okay, you know the famous scenario that we have seen last year, where all the retailers trying to beat the whale. You remember which stock was that, right? In the US market? Yeah. And the next one will be small cap stocks. Company offering unique product or services that no other are providing. And this could prove that there could be a potential gem or a star or a potential dumpster, you know. So be careful when you are trading and putting more money in this speculative zone. So what's next after I split all the assets based on these rules? Is that all? Are we done here? Not really, of course. There are still a few minutes down in your, the bar down there that you can see the video. Yeah, here comes the important part of today's sharing. The profit that you secured from the speculative segment. Reinvest it in your long-term, or your medium-term portfolio. So whatever you make here, you reinvest them into your portfolio, which you are building for a longer term. You may rebalance it every month, every quarter, or every year, depending on how often you want to do it. It's up to you. It's on your free will. Okay, let the medium term and long term portfolio continue to generate income for you. Let your profit continue to compound. Okay, let your portfolio grow exponentially. You must have heard of this one. Okay, if you compound it, it will grow exponentially, not linearly. All right, so we'll see you at the top. And thank you for watching.